This is Adam from dodjit.com. I hope you've all had a really nice holiday. We haven't actually posted a video briefing on the website for quite a while, roughly around a week and a half, and the reason for that is because of the holiday season. We also took a little break, and also we've just now launched our new website. You can see there's a lot more information on there. We've got videos, we've got chart analysis, we've got different articles, and if you go into the school section, we've also now launched quite a few new courses, so feel free, take a look at the website, and I hope you enjoy it. Now, flipping over to the markets, let's see what's been happening. Basically, there's not been a lot that's really been happening in the markets. Volume across the board has really decreased over the last couple of trading days. This is because of the holiday season. A lot of traders decided to close their positions coming up to the holidays and have really decided to take a little bit of a break. We did receive a nice spike up yesterday. We're retracing all of that down today on the euro against the US dollar. I wouldn't expect too much movement. I think we're going to still continue to trade in this type of range, especially this week. And I would look for a breakout maybe next week. Obviously, if something's going to come out in the markets that's really going to spike some movement, so then obviously we could break out of this range, this recent range that we're trading in. Okay, so basically what's happened, US stock markets are rallying higher. They're just continuing higher. They're breaking every resistance possible. And it is really starting to feel like we're receiving this type of bottom. Now, I know that there are some pessimistic people out there that are saying at the moment they haven't cleared all the toxic assets off their sheets and there's a lot more stuff to come and we could receive another wave down. I am not contradicting that. I'm saying, yeah, we have to be very, very cautious at the moment. We could possibly be just in a nice rally in a bear market, so this is something we've got to take into consideration. If we're looking though at the different charts, we are seeing that sentiment is starting to increase. We're seeing the VIX starting to decrease, and we're seeing the different sectors really start to rally, which is coinciding with a few of the different currency pairs. Now, we've received also some inflation data. Inflation data was also just released. We received the PPI results from the US, which exploded higher. And what we got to take into consideration is like this. The Fed, all the central banks, they've been pumping in money into the markets. There's a lot of dollars now just swimming out there. And what we really now need is the economy to start picking up and consumption to start picking up. Otherwise, we might receive a little bit of problems. There are those out there at the moment that are expecting a little bit of inflationary pressures. So we're going to have to keep an eye out on that, and the best way to do that is just to follow gold. Obviously, if people think that inflation problems are going to start to arise, then they're going to send all their money into gold in order to protect themselves as a safe haven. In the meantime, we're starting to receive some nice setups. I just want to go over a few of them today. Regarding the euro US dollar, we can see here it's a daily chart. We have formed this type of double bottom roughly around here. And we've really started to head up higher. Now we've started to pull back, and what I'm looking at the moment, I am looking at this Fibonacci retracement level, because we are receiving support around the 50% level. I want to watch for a breakout, meaning I want to watch to see if we're going to break this trend line going down roughly around here. If we're going to receive a breakout on this trend line going higher, then what I'm going to class this is, I'm going to class this as a nice flag that found support around the 50% level. We're going to continue higher. My first target obviously is going to be 100% of the Fibonacci level, and we can see it coincides here, roughly around here, with this resistance level of 1.3738. We can see roughly around here during October last year. So this is my first level. If we're going to break that, then not a problem. We're probably going to head higher. We could even reach the 1.4436 level. This is just something that we're going to have to play it by ear and see how it turns out. Now, obviously, the Eurozone is not doing that well compared to the rest of the economies. We are seeing some additional problems out there, and I think what Trichet is going to have to do is going to have to continue to decrease his interest rates. The problem is whether the markets are going to really care, because, you know, one more interest rate cut or another one, I think the markets are fully pricing that in at the moment, that there's going to be another rate cut, and we're going to just have to keep an eye out and see what the extent of the rate cut is going to be. So if the market's already pricing in all these rate cuts, we could head higher. We're just going to have to keep a close eye on this. We are now trading in range. I would watch for a breakout to either side. This is regarding the euro US dollar. On the pound against the dollar, we've been receiving some nice swing trades at the moment. We've actually been playing this swing trade. We had this massive trend line coming down roughly around here. We received our reversal candle right around here. You can see the reversal candle right around here. We headed higher. We formed this higher peak compared to our previous one, and now we're starting to feel a little bit of a resistance around this area. I want to see if we're going to break this level. If we're going to break this level of resistance, so then yeah, we could be thinking about taking a nice trade to roughly around this area around here, 1.5446 area. If we look, in addition, we've got this nice positive divergence going on roughly around here. While the price pattern was decreasing, we received this massive divergence. So things do look good at the moment on the pound against the dollar. Again, I want to wait for a break of this level around here, the 1.4985. For those of you who aren't in the trade at the moment, I wouldn't go into the trade at the moment. I would wait for the break. For those of you that are already in the trade, keep a close eye. You've got this trend line that you can use as a support level and to place your stops. Obviously, if we're going to break this level, trend line level around here, we could be heading lower. Regarding the dollar against the Japanese yen, you can see around here it's a daily chart as well. I normally tend to use the daily charts. Just want to show you what I'm looking at the moment. We have received this nice bullish uptrend, and I think we're going to still stay in this bullish uptrend. The only problem is that I'm looking at the moment is that we touched our upper trend line, and we did receive this negative divergence thing going on roughly around here. So I would be cautious about this trade at the moment. We are now trading on support level. It acted as resistance roughly around here. We're probably going to continue to see some support, especially due to the low volume at the moment. And as volume starts to pick up during the week, then we could see a breakout. But at the moment, we are seeing that risk appetite is starting to head back into the markets, which is actually driving this higher. If we look at all the currencies against the Japanese yen, we're seeing that they are starting to head slightly higher. So I would keep an eye out on this. The last chart that I flipped over to is the gold chart. Now, I spoke about the gold chart in the beginning of this video. I stated that if we're going to start to see some inflationary pressures, then people are going to start to rush to gold. So this is the chart. I'm not saying you want to trade this chart at the moment, because personally I don't think it's going anywhere. We've been lingering around the 900 level for quite a while, so I wouldn't think about trading this, but I would keep an eye out because we did break our upper trend line, and now we formed this secondary trend going down roughly around here. Now we are in this big bullish market of gold. I would watch to see where we're going to continue around these levels. If we're going to break our lower trend line, then obviously we're going to probably see some nice bullish action on stocks, on the currency pairs. If this starts to head higher, breaks the 930 area, so then yeah, probably investors are going to start to speculate that inflation is starting to become a little bit of a problem in the economy, and then that could cause further problems down the road for the US economy, for the other economies. And then what might happen is that traders might start to shift their money back into safe haven assets. So keep an eye out on these things. We're going to be posting more videos during the week, and keep an eye out for next week. We're going to get back into full action, so keep an eye out for the videos, for the charts, and we hope you enjoy the new site. This is Adam from dodjit.com.